The Chinese yuan will never become a true international currency. It can't even achieve free circulation. I went to Vietnam to travel. Hong Kong dollars can be used, but nobody wants renminbi. These are actual comments from Chinese internet users discussing whether their own currency could challenge the US dollar. Wait, what? Chinese netizens are saying their own currency isn't ready for prime time? This might surprise you, especially if you've been hearing about China's growing economic power and the decline of American influence. First off, quick heads up, China's currency is officially called the renminbi, and the abbreviation is RMB. We'll just stick with RMB, or sometimes Chinese yuan, throughout this video so we're all on the same page. Today, we're diving deep into what Chinese people really think about the renminbi potentially overtaking the US dollar as the world's dominant currency. And here's the thing, the conversation happening inside China is way more complex and realistic than what you might expect. We've gathered opinions from leading Chinese economists, financial experts, and thousands of ordinary internet users to give you the real picture. What we found will challenge everything you think you know about this topic. Let's start with the group that believes the renminbi is gaining ground and has real potential. Professor Sheng Songcheng from China-Europe International Business School represents this optimistic view. He argues that the US dollar is no longer in a monopoly position. The Belt and Road Initiative. Who wouldn't want infrastructure? Which country wouldn't want supply chains, financial centers, markets? The internal chaos in the United States. In the next 1 to 20 years, the USD will weaken, the euro will stand aside, the yuan will climb step by step, step by step. Professor Sheng points to something interesting about currency valuation. He notes that, in terms of purchasing power, RMB and USD have a ratio of 1 to 3.5, a huge gap compared to the current exchange rate of 1 to 7. The expert assesses that RMB is seriously undervalued. His argument is that China is choosing a new path of independence from the US dollar system. But even among the optimistic voices, there's recognition of major challenges ahead. Another expert explains why the dollar became dominant in the first place. After World War II, the United States, relying on its strong industrial power and huge gold reserves, established the Bretton Woods system, making way for the United States. This same expert identifies 3 critical conditions the renminbi must meet. First, expand imports and balance the trade surplus. Second, open the financial market to allow free convertibility of the renminbi. Third, increase the attractiveness of RMB-denominated assets. Here's where it gets interesting. This expert admits that fulfilling any one of these conditions would be a major change for the economic market. Now let's move to the second group, and this is where things get really eye-opening. These are the voices saying the renminbi simply isn't ready, and they're not holding back. One user puts it bluntly, China's efforts to use non-free market tools to promote RMB internationalization in a global system dominated by free capital have led to a semi-closed, contract-bound currency distribution mechanism, resulting in a black box of RMB export that looks like it is spreading, but is actually not sustainable. The travel experiences shared by users are particularly telling. Remember that Vietnam comment from the beginning? Another user shares, I have traveled to many countries with lots of Chinese tourists, like Malaysia, Thailand, Indonesia, Nepal, Seychelles. Many places do not accept cash renminbi, Australian dollars, Swiss francs, Japanese yen. Exchanging is not for cash renminbi, only Visa cards. No one recognizes you right at your doorstep, yet you still want to go out into the world. The criticism gets even more direct. Anything that cannot be freely exchanged can never be internationalized. And going to the bank to withdraw more is as difficult as checking household registration. But perhaps the most insightful criticism comes from users who understand the economic fundamentals. One user explains, China's trade relies on exports, only selling without buying, meaning you can only accept other people's currencies. How can you replace them and benefit from it? Another adds, honestly, if you run a trade deficit with the whole world, that allows the world to accumulate your currency. Conversely, if you always want to earn money from other countries, it is always impossible. China exports goods to almost every country but rarely buys from them, so there is no chance for others to accumulate renminbi. This brings us to our third group, those offering constructive analysis of what would actually need to change. One user frames it perfectly. 3 factors of a currency: cheap transactions, stability and safety, smooth circulation. Which factor can Chinese yuan satisfy? Expert Kai Jianyua provides perhaps the most detailed explanation of why the current system works the way it does. He explains, whether the US dollar will be replaced is not determined by politicians' speeches, and demand is not determined by trade. For example, why can't the RMB replace the US dollar? Kai walks through the practical reality. Today, when you leave the warehouse in mainland China, you have to receive money for exports, and you have to pay money for imports. What does trade surplus mean? I charge more than I have to pay. He continues, to discuss this issue, what currency should I charge in to make you feel comfortable? Are you talking about the Indian rupee? Don't you trust Argentina? Argentina often doesn't trust you. What are you talking about? How much do you charge? Wouldn't it be reassuring to receive RMB back? Yes, so can I ask if the other side has RMB? No, because the other side has a deficit. How can they have RMB in hand? This expert gets straight to the core problem. So trade determines currency, not currency determines trade. He then explains why the US dollar dominates. The United States has the world's deepest and most open capital market. Its share of global GDP is around 30% now, down from 60% in the past, but now it's about 33% of global financial assets. Because the US capital market is completely open, every country feels safe knowing that any dollar they hold can be freely sent to America and invested in all kinds of financial products whenever they want. The contrast with the RMB is stark. If you end up holding too much RMB, you're stuck. You can't easily get out. Sure, you could try to buy some Chinese bonds, but if foreigners aren't normally allowed to do that, you'll need special approval. So you sit there waiting for the government's permission. One user offers perhaps the most profound insight about what true internationalization would require: deeper analysis. For the RMB to replace the US dollar, China must abandon its manufacturing capacity and global factory supply chain advantage and become a country dominated by financial capital markets like the United States. Another user explains the fundamental trade-off. Let all countries have RMB in their hands. What to do? Disperse the manufacturing industry that joined the US to many other countries and print its own dollars to buy. This way, the country's manufacturing declines, its domestic currency becomes widespread, and it also owes a huge fiscal deficit. What emerges from all these voices is a picture of informed realism rather than naive optimism or pessimism. Even supporters acknowledge that replacing the US dollar with the RMB cannot be achieved overnight, but every step is accumulating momentum. They point to progress. 20 years ago, the RMB accounted for less than 1% of international payments, and now it is close to 5%. But the challenges remain enormous. The consensus seems to be that fundamental structural changes would be required, changes that would transform China's entire economic model. So what do Chinese netizens really think about the RMB challenging the US dollar? The answer is far more nuanced than you might expect. What do you think about these perspectives from Chinese netizens? Were you surprised by how realistic and critical they are about their own currency's prospects? Let me know in the comments below, and don't forget to like this video if it gave you a new perspective on this important topic. Subscribe for more deep dives into what people around the world really think about global economics and politics.